Hey there, tech enthusiasts. Welcome to the Friday edition of Tech Stocks Daily, where your weekend starts with a hot tech twist. Today, we're diving into a sizzling options flurry with Workday, hinting at intriguing undercurrents for the cloud software titan. We're unpacking Synopsys' sharp rise and its roller coaster ride amid stiff competition from Cadence and ARM. Investors beware. Paylocity caused a stir with some fascinating insider sell-offs, leaving us all guessing. Savvy financial moves, or more to the story. And if that's not enough to stoke your curiosity, Fortinet's beefy new innovation hub is set to shake the cybersecurity scene in Atlanta. Buckle up for all this and more as we decode the market's most intriguing narratives right here, right now. Here comes your gateway to tech investing this Friday. Today, we're diving deep into the world of Workday, a cloud-based software dynamo making waves in the tech industry. So what's the deal with Workday today? Well, there are quite a few buzzworthy developments that have the business and investment communities buzzing like happy bees in springtime. First up, there's some intriguing action happening in the stock market's backstage. Options trading for Workday. Unusual is the word of the day when it comes to the volume and nature of these options. Big-pocketed investors have shown a keen interest, sparking speculation that something big might be brewing behind the scenes. For those of us not wearing Gordon Gekko suits, options allow investors to hedge bets on stock price movements. With a flurry of calls and puts flying around, it's essentially a mixed bag with 50% of investors taking a sunny, bullish stance, while the others cautiously clutch their umbrellas, expecting rain. Also on the Workday radar, the company has enjoyed a healthy 17.1% boost over the past year. They're not breaking Olympic speed records, but they're certainly keeping ahead of some competitors. Their secret? A growing appetite for their human capital management and financial solutions, driven by businesses moving to the cloud at the speed of light. Workday is capitalizing on these emerging tech trends with finesse. What's keeping investors' tech taste buds tantalized is Workday's ongoing parade of partnerships and acquisitions designed to turbocharge their offerings with artificial intelligence. Q, in all the AI will take over the world buzzwords. They've struck deals with Salesforce, bringing AI into play to levitate office efficiency, and bagged companies like HiredScore and Evisort to power up their software's AI muscle. These augmentations promise to streamline processes, making getting your hands on factual data as quick as processing a TikTok video. Earnings expectations for Workday are equally peppy, with estimates for 2024 and 2025 climbing a respectable 7.7% and 7.5% over the year. It's enough to make investors grin like a cat caught in a canary basket, especially since Workday seems adept at consistently surprising on the upside come earnings season, carrying on a winning streak of pleasant earnings surprises, averaging a cool 9.1% over the past 4 quarters. To wrap it all up with a spoiler, tech soothsayers and stock analysts alike are giving Workday a hopeful nod, suggesting that while doing the everyday work exciting might be a stretch, investing in Workday seems a sure way to sweep up some promising returns. The stock's glowing Zacks rank number 2 rating further cements its place on the investment watch list of those looking for stocks with a touch of future-forward fervor. So, if you've got some investing bucks hiding under the proverbial mattress, Workday might just be a tech titan to keep tabs on. Let's wait and see what their next Cloud9 move could be. All right, folks, let's dive into the latest buzz surrounding Synopsys, which has caught quite a bit of attention today. First up, let's talk about a little activity in the options market that's got Wall Street talking. Today, Benzinga's options scanner threw up some intriguing data, highlighting unusual options activity with Synopsys' ticker, SNPS. We're talking 8 extraordinary transactions, guys. It seems some big-time investors are expecting a storm, as these moves typically hint that something juicy or not so juicy is brewing. Out of these major moves, about 37% of those trading options seem to think Synopsys is headed for a gloomy forecast, while 25% are more optimistic, leaving the rest in investment limbo. It looks like some heavy bets are placed between the $520 to $670 strike price range. Now, does this mean a potential roller coaster ride for Synopsys? Maybe, but the suspense is part of what makes investing spicy. But that's not all. My tech heads, let's talk valuations and dilemmas. Synopsys is sporting a forward 12-month PE ratio of 36.76x, higher than the industry average of 33.22x. While that's traditionally seen as indication of investor confidence, everyone's asking if this pricey tag really fits, especially as some recent performance metrics aren't exactly booty-shaking in tech stock land. Here's where the plot thickens. For the year, Synopsys shares have only climbed a modest 6.5%, lagging behind the broader market gains made by the likes of the S&P 500 and the tech sector SPDR. To pour salt in the wound, competitors like Cadence Design and ARM are cruising past with mind-blowing double-digit growth. The real concern here is in Synopsys' core strength, the design automation segment, which saw only a 6% revenue bump in Q3 of fiscal 2024, below their usual double-digit ladders steep. Economic jitters and potential recession threats might be dragging down R&D spending, signaling a bit of stagnation for Synopsys. And don't even get me started on the competition front. Cadence is aggressively strolling into AI and high-performance computing territory, threatening to munch on Synopsys' market pie. Meanwhile, ARM Holdings is flexing its muscle in chip architecture, closing doors on certain sector opportunities for Synopsys. But with great competition comes great responsibility, and Synopsys is being pushed to innovate faster. Rising R&D costs and operational expenses are shark-biting their profit margins. It's a tightrope walk between orchestrating strategic partnerships and staying competitive while trying to avoid toppling into the sea of redundancy. With these challenges looming and an above-average PE ratio creating jitters, analysts in the tech stock hall are draping their sell jackets over Synopsys right now. The focus might be shifting to tech staples promising stronger growth and better pricing. So on the market stage, Synopsys is doing a balancing act, and investors might just be humming to the tune of should I stay or should I go for now? That covers the flashpoints on Synopsys today. Stay nerdy, tech enthusiasts. Boy, oh boy, Paylocity Holding grabbed our attention today with some insider action that set the market buzzing. Picture this. Jeffrey T. Diehl, a director on Paylocity's board, decided to do some financial acrobatics. On November 14th, he executed significant stock sell-offs, totaling around $7.67 million, which made its way into the news, leaving investors and market watchers curious and alert. Firstly, let's break down what went down. Diehl offloaded a hefty 36,133 shares worth a whopping $7,607,242, according to a Form 4 filing with the SEC. As if his intention to diversify his portfolio wasn't clear enough, he also sold an additional 593 shares for $126,386. Despite this flood of stocks in the market, Paylocity's stock experienced a modest dip down by just 0.3% to $204.89 in Friday morning trading. It's like watching a massive cake barely moving when someone sneaks a slice. Why does this matter? Company insiders such as Diehl typically have access to more inside info than the average Joe, which is why the phrase insider trading can give investors serious pause. Insider transactions like these provide clues about future stock performance. Maybe someone knows something the rest of us are missing? There's an old saying, when a company insider buys shares, much of the world takes note because they expect profits down the line. But when they're selling, the reaction isn't quite as straightforward. After all, sales may just mean the insider needed the cash, plain and simple. Now peel back some layers, and you'll see Paylocity's been encountering other financial hitches. As of late September 2024, revenue growth skewed down by about 12.5%, amid tough turf battles within the industrial sector, where stellar competition surrounds it. That said, the company's gross margin, standing proudly at 68.05%, indicates it's squeezing those pennies wisely. As we ponder whether opportunities lie ahead, consider these taste testers of investment metrics. Paylocity's price-to-earnings ratio sits lower than average at 61.16, signaling that investors seeking bargains might see a cruiser waiting at the harbor. Conversely, its price-to-sales ratio sits on a slightly high hill at 8.65, possibly pointing toward overvaluation, like buying bespoke chocolates in an inflationary gourmet market. Another factor is market capitalization, which swings below industry averages, a sign of the company's smaller scale relative to rivals. Let's not forget Paylocity's rock-solid stance on debt, with a nifty debt-to-equity ratio of 0.34, suggesting they're in the cruise lane, fiscally speaking. Stock strategies and scouting the wins of some bounty aside, remember keeping a keen eye on those insider dealings like this could clue us in on a grand seafaring play, potentially guiding us to uncharted treasures. At least, that's what the dreamers say. Investors, keep the compasses handy. All right, folks, let's dive into today's spotlight story featuring none other than Fortinet, the cybersecurity juggernaut. What's the buzz all about? Well, Fortinet has announced the opening of a new innovation hub in Atlanta, Georgia. Get ready for some major tech vibes because this isn't just another office. It's a 215,000 square foot, 10-story fortress of innovation that's about to make waves. Now, why is this a big deal, you ask? Fortinet is not just expanding its real estate portfolio. They are deepening their roots to grow stronger and shield us all from the spider webs of the internet. With this move, Fortinet underscores its steadfast commitment to global expansion and enhanced collaboration with clients, partners, and tech enthusiasts alike. Atlanta is gaining a major player in the tech game, amping up its reputation as a business and technology powerhouse. The ribbon-cutting shindig is all set for November 15th, featuring top Fortinet brass like Ken Ji, the company's founder and CEO. It sounds like it'll be quite the event, but don't worry if you didn't score an invite. Here's a cool aspect of the Innovation Hub. Fortinet isn't just inflating tech bubbles, they're pumping life into the community too, with donations to local Atlanta chapters of Hire Heroes USA and Cyversity. These organizations focus on empowering veterans, military spouses, underrepresented communities, and women, bolstering Fortinet's mission to build a diverse and skilled cyber workforce. So if you're a wannabe tech warrior or know someone who is, there might be some incredible opportunities lying ahead. Fortinet also re-emphasized its cybersecurity mission. Their elite FortiGuard labs continue to geek out with cutting-edge machine learning and AI to keep one step ahead of cyber threats. If cybersecurity were the Wild West, Fortinet would be the clever sheriff riding into town to save the day. With over 50 enterprise-grade products within their lineup, Fortinet claims they've got our backs from every possible angle. This incredible new addition to Fortinet's real estate isn't just bricks and bytes. It's a testament to evolving the cybersecurity landscape and leading the charge. More than 500,000 customers already trust Fortinet's expertise. So Atlanta residents, you're officially on the cybersecurity map. What are your thoughts on this bold move by Fortinet? Do you think Atlanta is ready to shine even brighter as a tech and business hub? Could this spur new innovations, job creations, and collaborative magic in the area? We're curious to know how you feel about cybersecurity companies expanding their physical footprint nationally and globally. Let us know in the comments below. Your opinions just might spark the next great discussion around this digital campfire. All right, folks, let's hone in on Synopsys, ticker symbol SNPS. Picture this. You've got unusual options activity lighting up the board like a Vegas casino during rush hour, and Synopsys is sitting with an enticing PE ratio that's a tad higher than the industry average. It's perched at 36.7x compared to the industry norm of 33.22x. Now, usually, a high PE ratio indicates that investors have a rosy outlook on future growth, but here's the conundrum. Synopsys' recent performance isn't exactly setting the tech world on fire. Shares have risen a modest 6.5% this year, trailing far behind its speedy counterparts like Cadence Design and ARM. You've got the design automation segment, typically the heart-pumping strength of Synopsys, logging in only a 6% revenue growth in Q3 of fiscal 2024. I mean, that's ordinarily the domain of double-digit dreams. Couple that with economic jitters possibly tightening the R&D purse strings, and it's clear there are some potholes on this road to success. Against the backdrop of fierce competition from Cadence and ARM, and the challenges of keeping that innovative edge razor-sharp, I'd give this stock a hold for now, especially if you're already invested. The flavor here is patience. Is Synopsys cruising for a market rebound or ready for a tougher cut as the year plays out? But don't just take my word for it, because financial journeys are like road trips. They're all about your personal comfort and horizon point. Dive deep, do your research, and decide what moves align with your portfolio goals. Keep those financial wheels turning, and let's see how the plot unfolds. Today's market activity felt like riding a thrilling roller coaster through tech town. Workday's options trading frenzy suggested something exciting brewing under the surface, while Synopsys sat in a precarious position, wrestling with lofty valuations and competitors outpacing them. Paylocity's insider trading sparked curiosity and fortified its fiscal strategies behind the scenes. Meanwhile, Fortinet declared its dominance loudly with a massive innovation hub ready to stir up the tech world in Atlanta. If you enjoy keeping up with the latest tech buzz as much as we love bringing it to you, make sure to smash that like button, pound the subscribe, and share the good vibes far and wide. Swing back on Monday for another helping of tech commentary and news bites that bring a smile to your face. Until then, have a fantastic weekend, doing whatever makes your techie hearts happy.